Hi everybody, this is Lara at Elliott Wave Gold with an extra video update for you. I'm going to video the process I'm going to go through today to try and find a more immediately bullish wave count for gold. I've had a few people send me messages or make comments on my analysis that I can't possibly be having a bullish count for the S&P or expecting the S&P to be in a bull market and oil to be in a bull market where gold and silver are in a bear market, that can't happen. So what if I've got this wrong? I want to be as open-minded as possible. What if my wave count here is just wrong? What else could be happening? This at the daily chart level. So the weekly chart level, this count for the bigger picture is going to be bullish. When cycle 4 is over, gold's expected to move higher. But the question is, can cycle 4 be considered over here? Okay, so that's the question I'm going to try and see if I can see it over at the last low. That's what I'm going to try and answer with this exercise. The very first thing I note is cycle 2 lasted 119 weeks. If cycle 4 is over here, it's lasted only 17 weeks. Well, that may not be actually that bad. Fourth waves for gold do tend to be more brief than their counterpart second waves. That is a little bit too much of a difference, but it's entirely possible. So let's be open-minded and consider all possibilities. What if this is just wrong? Okay, I'm going to open a new wave count. I'm just going to call it play, because when I'm just playing around with ideas, that's what I usually call it. I'm basing it on this bullish count at the daily chart level. Okay, here we go. Let's get rid of some of these elements. I'm going to get rid of all of this labeling here. I'm going to leave that channel in because this week it's provided resistance, so it's fairly important. What could cycle 4 be here if it's over? Well, first things first, we would have an invalidation point down here if the bull market for gold is resuming. So let's put that in, and this would be the confidence point. The final one anyway. Actually, I'm just going to change this to confidence point. And we would have an invalidation point down here. 1766.53. Okay, at first glance this just doesn't look like a single zigzag, but that's the most common structure. Let's see if it fits. Yeah, nah, A can't be a 3 like that if B is less than 90%. Could C be an ending diagonal? Let's see. It could. Actually, it could. Oh God, could it be that obvious and easy? Okay, for C to be an ending diagonal, all the subwaves must subdivide as zigzags. The diagonal here would be expanding, the trend lines are diverging. 3 is longer than 1, 5 is longer than 3, and 4 is longer than 2. So the rules regarding wavelengths are met. They all look like zigzags, particularly 2 and 4. And this one looks like a zigzag. Well, that was actually pretty quick. Yeah, okay, so this is a more immediately bullish wave count for gold. And the only problem is the proportion between 4 and 2, but it's not such a problem for this particular market. Okay, so I'm going to use that. That's going to be a remarkably short video. Don't know if anyone's going to learn much from that, but I'll put it up on our little YouTube channel anyway. Thank you very much for watching. And if you want daily analysis, you'll find it on my website, but it's a subscription service. I'm not going to be working for free. Thank you very much.